You've heard the questions. How is crypto taxed in India? What are the rules and what should you watch out for? This video breaks everything down for FY 2025-26. First, tax rate on gains and any profit from selling or swapping cryptocurrencies or NFTs, virtual digital assets or VDAs, is taxed at a flat 30% under Section 115 BBH. There is no distinction between short-term or long-term holdings. On top of that, there's a 4% cess, making the effective rate 31.2%. Only the cost of acquisition can be deducted. Losses cannot be offset either against other crypto gains or other income. Next, TDS, tax deducted at source. Every crypto transaction beyond thresholds is subject to percent TDS on the gross amount. That applies even if you don't make any profit. It's essentially an advance tax. If you're using Indian exchanges, they'll often deduct this. If you're using peer-to-peer or foreign exchanges, responsibility may fall on the buyer. What about staking, mining, DeFi rewards? These are taxed twice. First, when you receive them, they are treated as income from other sources or business income, depending on your setup. Taxed at your slab rate based on the fair market value at receipt. Then, when you dispose or sell those assets, 30% on any gains. Mining costs like electricity or hardware are not deductible under these crypto rules. Gifts and inheritance. Gifts from close relatives are tax-free. If you get a crypto gift from non-relatives and its total value exceeds $50,000 in a financial year, then the full amount becomes taxable as income. Inheritance isn't taxed at receipt. But when you sell inherited crypto, you pay 30% on gains, measured from the original owner's cost basis. NFTs are treated just like other VDAs, same 30% flat tax, the same rules for gifting, disposal, and reporting. Creators might also have their earnings treated as business income in certain cases. If you use foreign exchanges or do peer-to-peer trades, you're still liable. Indian residents must report gains on worldwide crypto income. Foreign exchange usage is caught, and the 1% TDS rule, even if hard to enforce, is expected to apply. Compliance, very important. From FY 2023-24 onward, you have to report all your crypto activity using Schedule VDA in your income tax return. That includes dates, values, cost of acquisition, transfers, etc. If you fail to deduct or pay TDS or omit crypto gains, penalties can be steep. 50% to 200% of the tax you owed, plus interest, even imprisonment in extreme cases. What can you do to plan better? Keep detailed records of every transaction, use crypto tax tools, limit frequency of trades to reduce TDS friction, plan for liquidity, set aside enough for tax. Consider gifting within relatives where possible. Also stay updated. This regime is relatively new and under review, and industry inputs are being solicited for possible changes. Bottom line, any profit you realize from crypto or NFTs is taxed heavily. There is no benefit for holding long. Losses don't help, and TDS plus reporting rules are strict. If you trade, stake, mine, receive gifts or rewards, you must account for tax from day one. Want to dive in more details? Visit http://pipinguindan.net/crypto guides crypto tax in India